Good morning and welcome to my daily report market videos with me, Richard, market analyst at Hantec on Tuesday 25th of June. There's a fairly consolidating look to markets today, nothing too significant in terms of direction. It seems as though that some of the significant moves that we've seen in recent days have just started to dissipate, not really though for gold. Gold continues to run higher, but the run higher that we have seen on the euro has just started to roll over a shade. Also equity markets have started to just consolidate a touch. Now we've got this important G20 meeting towards the end of this week between Presidents Trump and Xi of China, and certainly that meeting is going to be a massive impact, I think, on market sentiment in the coming weeks, because it could have a really significant defining role on the Federal Reserve monetary policy actually. But for now, what we have seen is that the dollar sharp sell-off in the wake of the FOMC decision last week has started just to slow a little bit. A little bit of an intraday turnaround today, trading higher on the day for the dollar index. Just a slight amount of consolidation you can see through Treasury yields, still around 2% on the 10-year. The 2-year is slightly lower still, but again, not too significantly lower, and that is again sort of reflective of this consolidation that we have got. In terms of equity markets, it's interesting that the S&P 500 has just sort of lost its impetus to the upside that it had from the Fed meeting, and just started to consolidate a touch on Friday and also yesterday. And if you look at the futures, they are slightly weaker again. So this suggestion that equity markets are now cautious in front of the G20, I think, could be now taking hold. So in terms of where we're at today on the data front, we've got the US consumer confidence, the Conference Board's consumer confidence for the state, confidence for the states, is a key data point this afternoon, and it's expected to be 131 spot 131 spot 1, and that is just down slightly from last month, but still you can see how consumer confidence has remained incredibly strong actually, despite the recent weeks of caution and market fear of that the trade dispute has been impacting on. So consumer confidence today not expected to deteriorate too badly on that Conference Board indicator there. Just before that, we've got the Acacia house prices. Now that is the house price growth expected to come back slightly to 2.6%, but continues to fall away. And into the afternoon, then we've got new home sales actually expected to pick up slightly. So that would be a slightly better state of affairs for the US economy if that were to be the case. And also watch out for this number here, Richmond Fed. The FOMC were talking about last week about the regional Fed surveys. So this is an important one, just to give a gauge of how they're going. Actually, I've seen expectations of 7, so an improvement on the last month's 5 on that number there. So that'll be interesting this afternoon. Right. So my chart today is the Australian dollar. Now, what we have seen is the Australian dollar, like obviously many other currencies, Aussie dollar has rebounded against the US dollar, but you look at how this recovery is going, and it's basically just unwinding back to this overhead supply around 0.7. You look at the fact that the near-term technical indicators have picked up. RSI still heading higher, as are the MACD and stochastics, but again, I reiterate the fact that it's basically coming back towards 60 on the RSI, a level that has proved limiting throughout 2019. It's currently in the low to mid 50s. So there is still room for improvement, as it says, to 0.7, which is basically where we saw the early June high. So can the Aussie take this recovery and go with it? Because you've got this this overhead supply 0.7, which is a key level, key area that may well prove restrictive. So we're still watching for this recovery to continue. I mean, the near-term charts are still very positive. The hourly and MACD above neutral. Whilst that continues, then you're still going to remain positive, as you would do with the market trading above this 55-hour moving average. Now, the initial support I would be taking not really today's low 69.50, but I think 69.40 being yesterday's low, but also a pivot line from last week's breakout. And then obviously what we'd be looking at is another pivot around 69 figure being the key level of support. If you break that to the downside, then you really are turning corrective. But trading above this near-term pivot remains supportive. This pivot line comes around again 69.40, so that is adding to this what I just showed you on the hourly chart, 69.40, that breakout level, and also supportive for yesterday's low. So that is your line of support initially, but certainly the momentum is with the recovery at the moment, but just for how long would be my question. So that's, I think, what we need to be looking out for on the Australian dollar today. So with that in mind, I wish you good luck in your trading, and I will speak to you later.